Chris here. You're watching Bitcoin Whale. Let's get straight into it. Bitcoin closed the week up 8.1%. If you actually bought that dip and held through the noise, yeah, you earned that one. Here's where we stand. Yesterday, Bitcoin was at 66,475. Right now, it's at 66,058, barely moved. No trigger fired, so everything from yesterday carries straight into today. On the 4-hour, there's a symmetrical triangle that's been building out over the last few days. And I'm going to draw both lines for you right now, step by step, so you're not just taking my word for it. Half of crypto Twitter thinks it's going up because they're long. The other half thinks it's going down because they're short. That's not analysis. That's just bias. We're doing something different. We're reading the chart. First line, the ceiling. Descending resistance. I'm anchoring it up at the cycle peak that's around 82,048 and dragging it down to the most recent lower high. Watch where it settles. A line that's only touched twice is basically a guess. This one, price has come up here more than 5 times and been turned away every single time. That's about as validated as a resistance line gets. Watch. I'm marking the clearest projections right on the chart. Projected out to right now, that line sits at 66,423. Write it down. Bulls need a clean 4-hour close above it, not a wick, an actual close. That's the trigger. Quick one. If these levels are giving you something useful, hit subscribe. I do this breakdown every single day, just for Bitcoin. Now I want to drop to the 1 hour. The 4-hour shows you the walls. The 1 hour is where the actual entry lives. On the 1 hour, the recent range runs from 60,393 at the low all the way up to 67,292 at the top, roughly 10%. And right now, we're sitting near the lower edge of it. Moving averages on this time frame. The 20 is at 65,466. The 50 is at 64,727, and price is above both. That's a properly stacked bullish setup. On the 1 hour, that's your immediate momentum read. Good. That's the near-term picture. Let me head back up to the 4-hour and finish building out the structure. Second line, the floor. Ascending support. I'm anchoring on the swing low at 59,130 and dragging it up through the most recent higher low. Here it comes. This floor has held more than 5 times. Every single dip got bought right here. It projects to about 64,605. That's the line in the sand. Above it, the bullish structure is alive. Below it, it isn't. 2 trend lines alone only go so far. The real edge comes from stacking other tools on top. And I've got a Fibonacci retracement already layered over this same swing. When different methods start pointing at the same area, that's where it gets interesting. Right around 66,423, several different methods all converge on the same zone. That's not a clean single line, it's a cluster. Funds see it, algos see it, retail sees it. Nobody's ignoring this area. I'm dropping a horizontal right there to lock it in. What's the bigger picture target? This pattern is $16,514 deep from top to bottom. When these patterns break, price tends to travel that full distance. That's the structural target, the bigger picture swing move. I'll give you the tighter intraday entry in a second, but this is what the measured move is pointing at. And the historical data backs this up. I watched these play out, 50, 60 times? The numbers are actually pretty compelling. Whichever way it breaks, price goes the full measure distance about 70% of the time. Direction's basically a coin flip. But once the trigger prints, the move is real money. So how do you trade it? 3 scenarios. Scenario 1. Bulls close the 4-hour above 66,423. If that happens, my target's 82,938. That's where I'd be taking profit. Scenario 2. Bears push through. A 4-hour close under 64,605. Flip the setup. Same math, going the other direction. Target's 48,090. Stop just above the broken level. Keep the size small. Scenario 3. And honestly, this is probably the most likely outcome. Neither trigger fires. We grind sideways. If that's what happens, the right move is no move. Sitting on your hands when the market's compressing is genuinely more profitable than forcing a trade. That's the full framework. One road up, one road down, and probably a lot of sideways in between. 3 clean levels, and the chart picks the winner, not me. You're reacting to a trigger, not guessing ahead of one. Here's my actual plan. Long setup. I'm switching to the 1 hour and drawing the exact entry, stop, and target right now. I'm not chasing this candle. I want price to pull back into the 66,000 level before I get long. Stop loss at 65,423, just below it. That's where I'm wrong, no debate. Target is 67,980. Risk reward comes out to about 3.4 to 1. I never force it. The reward has to clearly outsize the risk before I even consider it. And it only counts on a confirmed close. A wick doesn't cut it. Risk 1% of your account, not your whole stack. If today's breakdown helped you read the chart a little better, hit that like button. It genuinely helps the channel grow, and it tells me to keep making these. That's my Bitcoin Red for today. Stay sharp out there, and I'll talk to you tomorrow.